Hi, this is Michael Carlin, president of Henry & Horn Wealth Management, bringing you your Manage the Funds podcast. Today, we are talking all about nonprofits. As you probably know, there was a significant tax law change done and brought to us by this administration beginning of the year, and I don't know, many were concerned, worried about the world of the nonprofits, and it's something that we need to take a deep dive into. So today, we're delighted to be joined by Heather Allen, who's president, CEO, co-founder of Halo Animal Rescue, an organization that is near and dear to my heart. Heather, thank you for joining us.
Absolutely. Happy to be here.
Could you tell everybody about Halo? Because, listen, of course I know, but it'd be great for you to share just, something about, what the organization is, what it's about in a minute or so.
Sure. That would be my pleasure. So Halo was founded in 1994 by my mother and I. I am a Phoenix native, and we basically ended up going to a PetSmart one afternoon and got convinced to foster some kitties from the ladies over at the adoption center. And from there, it really just blossomed into us learning about the crisis in our community and for homeless animals in general, and knew that was something that we could get involved in. I've been a dog lover. I walked every neighborhood dog that anybody would let me walk and all those kind of things. So we have grown to an organization that is about a $3 million operation every year, and we have over 40 employees and a few hundred volunteers, and we save about 5,000 dogs and cats every year.
Yikes. So that has to be, we're 50, 60, 70,000 dogs, cats total. Yep. That's amazing.
Yeah.
So kudos to you for all your great work. And
thank you.
And again, I'm an animal person too, and I at the moment have two phenomenal Halo dogs. We could do a whole podcast on them, but we can't for today because we got to focus on nonprofits. So our clients, read the paper, they read the New York Times, the LA Times, and Wall Street Journal, and they're trying to figure out this, the Tax Cuts and Jobs Act and what that means. Because again, with the slew of new income tax laws, they write, and there's been a lot of writing about nonprofits are going to struggle raising money with the new rules. And so I wanted to talk a little bit about, nonprofits and the role of nonprofits, because there's an important role that again, not just Halo Animal Rescue, but others in putting the whole fabric of our social network together. Would you be able to offer your perspective on the role of nonprofits in not just Arizona, but like communities across the country?
Well, I think nonprofits, were really born out of the citizens seeing a need that wasn't being filled. The government does provide some services for some areas of need for humans, and in this case, animals, but it's falls very short of what the community's needs are. And depending on, what value the community, in this case, animals, and what value they place on animals, and how much excess income they have to take care of their pets, right. Really you'll see a difference in how the pets are cared for. And so the nonprofits are really there to just fill in that gap. And unfortunately, with these changing tax laws, it's there's less tax money in the pot to take care of all those needy folks and those needy animals. And there's even more pressure on nonprofits to fill that gap. But we have less money coming in.
And the tax law is working against you to try to raise that money, which again, we're going to get into. And so there's a piece in the LA Times that writes that there is estimates, there's a Council of Foundations that said there's going to be $16 to $24 billion per year less available for the nonprofit sector. And nonprofits work on razor thin budgets. They're not designed to raise. If you're raising $3 million, they're not paying these exorbitant salaries and this isn't like corporate jets and cars. Yeah. It's a different, but we need to remind our listeners, I think, because, some people like a $3 million business, like, wow, you guys must be, but can you, maybe break down a little bit of that? Because there's a huge difference between the two things.
Yeah, so we have a $3 million budget, but $500,000 is in kind.
Right.
So now you're at $2.5 million. Yeah, it's absolutely, and it's reduced rent in some of our locations. Sure. But we just moved from a different location, and now we have $14,000 in overhead per month for rent and utilities that we didn't have previously. All in the face of all this tax craziness as well. So, it's if the nonprofits, they're not designed to raise a profit and give money out to shareholders every month or year. It's just, that's not what a nonprofit's for. If you have excess money at the end of the year, you put it back into your programs. But we're always a balance at the end where there's not a whole lot left over,
right?
Because we're using it to provide for the animals and to hire staff to take care of them and take them to the veterinarian and pick them up from the different shelters that we work with. And
right.
Nobody is making a ton of money working at Halo. And so while our payroll is about $1 million a year, $1 to $1.2 million a year.
Mm-hmm.
That's a big chunk of it. It's, you have to have the people to take care of them every day.
You got 30, 40 people, something like that?
Yeah, it's, I think today it's at 43.
Oh, my goodness.
So, and the vast majority, we have a few managers and myself and somebody who takes care of our books and 2 girls in the office that, handle everything donor-wise and everything event-wise. And she also manages the volunteer and foster department. So it's everybody wears lots of hats. Even I drive the vehicle sometimes to go to another shelter to pick up animals. It's just, we all throw it in.
And that's the thing. And I think so the point here is let's not underscore the fact that nonprofits are regular organizations, regular companies with employees and responsibilities and all different sorts of expenses that they need to meet. But just there's a huge difference. This isn't like a spinning out huge dividends and huge profits. This isn't about cutting costs to try to. This is, nonprofits across the country are doing great work that the social fabric of our country needs in order to. Again, help improve the lives of people from all walks of life, and we can't do enough to underscore their importance. And so this Tax Cuts and Job Act, although many appreciate it for what it offers, the high net worth and core publicly traded corporations, there may be some spill out, which is essentially the purpose for this.
Right. I mean, there's always the give and
podcast.
take in every scenario. And unfortunately, the nonprofits are kind of taking a hit for the benefits for some.
Well, so let's talk a little bit about giving. So statistically speaking, giving by individuals, not just, again, Halo is similar, so we'll get into the Halo numbers, but giving by individuals makes up the vast majority of contributions that nonprofits receive. In 2015, Giving USA estimated that there was $258 billion given in that one calendar year. And of that, 72% of it was given by $258 billion given to nonprofits. Of that was 72% of it from individuals. Mm-hmm. The vast majority. This isn't like, again, big publicly traded corporations coming to the rescue. And a lot of it that is given by publicly traded are those in-kind distributions or in-kind contributions. Right. Can we talk a bit about the importance of the individual giver?
I mean, they really make up everything. It's when we get a gift in, and it'll, there'll be a little note in there. Maybe it's $20, and somebody will say, "Gosh, I'm so sorry. I wish I could give more." And it's like, right. No, but you don't understand. You giving that $20. If you give $20 a month, that's $120 a year, and that's what the average of what we have about 8,000 individual donors, and without those individual donors, we literally. I mean, I know you hear it's kind of like becomes cliche, and like you're not even sure if it's true, but it's absolutely 100% truth that we couldn't do what we do without the donors. I mean, they make up a third of our income today.
And like the average donor is giving what, like
$120 a year. So for people who think, oh, well, and most donors who give to an animal welfare organization give to an average of 5.
Right.
So, I don't have any qualms about, oh gosh, they're giving to another animal welfare. It's like, that's fine. They usually, if you give to animal welfare, you give to a few. So
or food bank or whatever. It might be. Yeah. So again, I mean, the little contributions make up the difference and allow you to do what you do. And nationally, giving increased every year since starting in 1976, with the exception of 3 years, and 2 of them were in the financial crisis.
Right.
So we have this expectation that year over year we're going to be getting increases to total giving, and I don't know if that's part of your budget or not, but it seems to me in 2017 and now again in 2018, you're seeing And again, other nonprofits are seeing as well this hiccup in total giving. So what kind of things are you seeing? And
well, it is true that we've always budgeted for, hey, you know, this year we did X and next year it's going to be X plus a little bit.
Sure.
And it's just not the case right now. In 2017, with all the natural disasters we had, you know, the different hurricanes and things, the people who were going to gave to, you know, the Red Cross and the humane societies that were on the ground at where those natural disasters were happening. And so they might have given to their local organization like Halo, but they felt the need to give elsewhere. And so for a lot of people, they can't give to both. And
so 2017 was a bit of a drain.
Right. So 2017, we expected to see about a 30% decrease in gifts simply because of all the things that were going on politically and with Mother Nature.
Right.
So we had that. And then this 2018 tax reform. It's like, oh, man.
I know.
This
Where
is
does it stop?
And trying to calculate, okay, so how is that going to impact us? And then what's our next move?
Right.
Because obviously there aren't less animals in need. And the need only goes up when all these things change. And so, you know, for us, it's really just trying to figure out, so how do we make that happen?
How do you navigate? Well, but let's talk about that Tax Cuts and Job Act. Let's get more specific. The standard deduction for single people, as recently as 2017, was $6,350. Now it's $12,000. I'll explain what that is in a second. Married filing jointly, the new standard deduction is $24,000. It used to be $12,700. So, again, in order for people to be deducting their charitable contributions, they need to meet a higher threshold. Mm-hmm. And the challenge is that threshold, when you already are taking in factors like mortgage interest deduction, lots of people have a mortgage, and if you're taking into consideration people's state taxes that they're paying, they have an income, they're already paying their Arizona and or other state tax, that's eating up the majority of what people are able to use as that standard deduction. And there's such a high hurdle that people need to get through now to be able to make that charitable contribution deductible. The thought is it's going to impact people in their desire to give if they don't get that deduction easily.
Sure. I mean, I think a lot of people give because they believe in the cause, but at the end of the day, we all have a finite amount of resources, and we need to try to maximize what we're doing with those resources as an individual.
Yeah.
And so that can definitely impact people's willingness to give.
Yeah, and if you look, there's this National Council of Nonprofits. So the way that they put that and position that entire change, they say this: as a result of the change, the charitable deduction will be out of reach by more than 80% of taxpayers, because essentially there'll be a lot less people itemizing.
Right.
Because the hurdles have increased. And the Joint Committee on Taxation estimates that the itemized deductions will drop in 2018 alone by $95 billion. $95 billion. Not all this would disappear. The change is estimated to shrink giving to the work of charitable nonprofits. And it estimates that this drop in giving would cost between 220 to 264,000 nonprofit jobs.
Sure.
So again, people do give because their hearts are warmed by what nonprofits do, but they also give because of this deduction. Do you ever hear that from individual donors about, they must be talking about the deduction, I assume?
Oh, sure. Absolutely.
Yeah.
I mean, they give to us, I think, because they believe in the work that we do. But like I said, at the end of the day, they need to have benefits for themselves outside of that. For a lot of people, that these tax deductions make a huge difference for them. And so we do have quite a few people that, request an end of the year itemized list of their donations.
Right.
And that's very important to them. Some people come in and they make a donation. You say, oh, let me get your receipt. And they don't care.
But not the majority of people.
No.
Right.
Those are the few, which is, we don't mind. Obviously, we're happy to, I'll write receipts all day long. That's,
right.
But most people do want a receipt because they need that for proof of their gift.
Yeah, that's what they put on their tax return, and they get their deduction processed. And as we look at that, there was also, the Congress could have put in place like the universal deduction. There was no provision for extending that, unfortunately, and there's proposals out there which would allow non-itemizers to deduct up to $4,000 per individual. So, again, if there's something that we would wish to promote, and again, we don't take, we're not taking a political side or position here in one in administration or another, but this universal deduction where, each individual can deduct up to $4,000 that they give to nonprofits would be an easy hurdle, something that would, again, because we're talking about $120 is what your average donor is giving. If we could end up having something in there with this proposal where it's $4,000 per individual, it would seem likely to me that a lot of individuals would work hard to take advantage of giving because they are using and counting on some type of a tax benefit. So let's hope. Let's write your congressman. Send an email.
Yes, they even, it's so easy now. All you have to do is send emails. You don't even have to have a letter and a stamp.
That's actually a really good point.
Right. I mean, it didn't used to be that way.
You could thumbs down their Facebook page. So we need to make sure that we talk about stacking, because no discussion on charitable giving is complete without stacking or front-end loading or making sure that you're doing everything you can to get through that standardized deduction hurdle that we were talking about. Again, single, it's $12,000, married couples, $24,000 plus, meaning that in order for your charitable gifts to be deductible, you need to cross that threshold, which a lot of people just don't do. So, which is a concern again to nonprofits, because oh my gosh, are my deductions going to be? Are they going to be deductible? Are they not? And there's so many people less and fewer. They're going to be itemizing, which is a concern. So, one of the tools and vehicles that we see people using is we see them using donor advised funds, and donor advised funds is a nice way for you to go ahead and give a larger amount upfront. And you're going to go ahead and contribute to an institution or organization. We tend to use Schwab, and they will let you dole out your charitably given dollars to any one of a number of organizations like Halo Animal Rescue and others that can, again, you can make a difference and you can stretch your gifts out over a longer period of time, but you're stacking it by giving it up front. Climbing over that hurdle, you want to make sure you're working with your tax advisor to make sure you structure this right, okay? This isn't blanket advice for everybody, but again, a donor advised fund is something for you to look at. If you're trying to find a way to, again, get across that deductible hurdle, make sure your charitable contributions will be deductible for you, and maximize your gifts, because nonprofits need your gifts now, particularly now. Well, a lot of people are fretting about, geez, do I even need to give? Is it going to help me tax-wise anymore? We want to stop that argument today and give people a path to give. Donor advised funds is one way to do that. Another thing, Heather, I bet you get bequests. And I bet you all nonprofits get bequests, or lots of nonprofits get bequests, right?
That is true.
It happens.
It does.
So bequests. So, again, someone passes away, and then you learn, or maybe you've known in advance, you learn that at their passing that they are to gift certain assets to your animal rescue.
Correct.
It's happened.
It has happened, and most of the time we don't even know about it.
Really?
So, we're trying to learn more about it. We would really like to get to know the donors prior, because some of these people are not people that maybe we helped them 20 years ago with a cat or something, and they remembered that generosity, and but they were silent that whole time, and they wrote us in years ago, and then we get, that's like the best mail ever, right?
Sure.
You get, of course not from that standpoint that they passed away, but you get, most people would be scared if they get a big thick packet from an attorney's office.
Sure.
And for us, we're like, oh, this should be good, right?
Right.
So, and it's very nice to, I would love to know who the people are, because I want to know our donors, and I want to know do they like dogs? Do they like cats? Do they have Halo pets at home? Just all those things. I really genuinely like to get to know.
Yeah, how can you best honor these people, right?
Exactly.
So again, we encourage you listeners that if you have written in a nonprofit into your will or your trust, certainly reach out. Because the nonprofits want to know. They want to know who you are. They want to make that connection. And it seems, we talk about bequests and giving after death because there's been some estate tax law changes too. So the exemption has been doubled. Okay, so now for a married couple, it's $22 million, meaning the first $22 million of your estate is not going to be taxed at death. And first of all, that's a significant increase from where it's been. It's been doubled. And if you rewind the clock back, I don't know, certainly 10 years time, that number used to be $1 million per person. Roughly, right? So, a couple would be with a $2 million estate. Anything $2 million and less for a married couple could pass on without estate tax, and everything over $2 million would be taxed at 50%. So now that $2 million number from 10 more years ago is now $22 million. So the vast majority of people do not have a $22 million estate. So the vast majority of people will not be paying estate tax at death. Because again, anything under $22 million, you don't have to worry about paying estate tax. And if you're not worried about paying estate tax, are you going to go ahead and do that bequest? Because part of the reason why you would do that bequest is to say, well, geez, our combined estate is $2.2 million. Why don't we give $200,000 of it to these nonprofits? We'll give $50,000 to Halo. We'll give $50,000 to 50, and you're going to give out the $200,000, so that way your estate won't be taxable because you don't want to pay the government 50%. Yeah. Some people say income tax is bad, and we get it, but the big one's estate tax. 50% of everything you own. So these tax law changes that have come into play have changed the way that people are going to view the world of bequests, and that there are articles that I've read that's going to cost nonprofits more than $4 billion a year. It seems like a low number to me. It could be even higher, but again, so for an organization like yours that has gotten bequests, to see that aspect of giving dry up would be difficult, I assume.
Absolutely. And, the opposite side of that is if the threshold to have estate taxes is so much higher, what tax money is not going into the government social services and therefore putting more pressure onto the nonprofits to provide those services?
Correct, because we didn't even touch on the fact that, again, the government's going to be supporting nonprofits a heck of a lot less. So, again, the need to give is greater. Corporations, you figure, give less. Again, their tax rates dropped a lot. So there's less pressure to give because it's again, for all their contributions that they're giving, they're getting less tax bang for their dollar.
Right.
Lots of individuals aren't able to itemize. We've talked about that. Right. The hurdles have increased. And again, so you figure there's going to be less giving there. I mean, you factor in 2017, a lot of nonprofits struggled because you had all these natural disasters, which was sucking up all the donations from all over the world, certainly all over the United States. And now we throw in the estate tax. It's kind of like, so again, the importance for doing this podcast is just this. It's that you represent, in my opinion, the very best of what the nonprofit organizations could be, making a huge difference with every dollar that you get. And I just don't want corporations that are listening and people that are listening to forget that and not give.
Right. I mean, I think, certainly tax benefits are very nice, and it helps everybody stretch their dollars further, and it makes giving much more attractive to some people. But I hope that true philanthropic side to people is still there, and that they want to help those organizations that are near and dear to their heart, and maybe it's that they make less gifts but bigger gifts where they really dig into the organizations that they've been giving to and learn more about them and get to meet the people who are doing the work every day to see if they jive with them,
Sure.
and to give to that really touches their heart.
Sure. I mean, again, we can't underscore this enough in the fact that we now have confirmation that the small donors and the small donations are what make a huge difference. But keep in mind, the big donations, you'll still get a deduction. Okay?
Right.
That rule hasn't changed. So go ahead, and if you want to give big, still give big. You'll be able to deduct that. Again, you got to check with your tax advisor. Yada yada yada. Let's make sure. But what I want to kind of take this conversation in a bit of a different direction, and that is, again, making sure that people understand how these nonprofits really work. we've touched on it in that we've touched on the fact that it's not the same thing as a big corporation with big marketing budgets and again big dividends and that kind of thing. It's a very different structure because corporations are doing everything that they can to minimize their taxes and R&D credits and different types of retirement plan styles, and nonprofits are very different. So could you help relate with your story to how these nonprofits have to navigate, and especially with you and your role with what you do, it's so different than what normal corporations are used to.
Sure. There are some very large nonprofit organizations out there that are kind of working the way you were just describing.
Similarly to the big corporations?
The vast majority are, my organization was started by my mother and I, and out of, our garages because we loved animals. And so, I have every document that exists in the organization is something that I have either written or edited. I know the majority of the animals by name. I know their stories. I know the organizations that they're coming from. I take in every single email and read every email of somebody who wants to surrender a pet. I may not be the person responding to it, but I see them all because for me, I think it's really important to have that balance between running an organization like a business so that you can continue to do the work that you love, and being grassroots and being really getting it and knowing the ins and outs of your operation. Because I've seen some big organizations, they're so big that the CEO has no idea how to even log into the computer system that they have, or, doesn't know even some of the names of the line staff employees and things like that.
And maybe spending time, I'm imagining, with just massive donors and donor parties and donor events and things like that.
Right. And, for me, of course, it's part of my job to ensure that, we balance the budget and that we make sure that we're smart about what we do and that I set the standard for how we care for the animals and for, the customers and all those kind of things. But, I think for me, when, for example, if we have a new employee, I think some of them think that, oh, she's the CEO, it's scary.
Yeah.
I better stand a little straighter when she walks by. And then they realize
You're
that
very
I'm
intimidating that way.
Oh, yeah, it's so scary.
Okay, yeah.
And then they catch me, it's the Heather voice, as everybody says, which I won't imitate here, but it's a little muppety when I'm talking to these animals. I love these animals, and that's why I do it. That's why I created this organization with my mom, and I foster dogs at my house, and I have 8 dogs.
You do?
Every time I adopt another one, I'm like, okay, that's it. I think I started saying that at 5, like 5's it. I know. Never mind. I have 6 cats too. But I also foster, pregnant and nursing moms because that's, I know that I'm a good midwife, and I know there's a need for these guys, and so a few hundred puppies a year are born at my house.
Right. Again, the difference. The difference between you and a regular corporation. It's one thing to answer emails at home.
Right.
So it's another thing when you're taking work home, but you're not unlike other nonprofits in that it's different because it's an organization with a heart.
Yeah, I think that's a huge difference. Is if you're a food bank and you've got the CEO who's like, here's this family, I'm going to carry the box to their car.
Right.
Not that they're working the line every day because obviously they have other jobs, but to do enough of that to really stay grounded in who you are. And I think, some people say, if it's a founder of an organization that's been there for a long time, they can have founder syndrome and they really just get stuck in their old ways and all those kind of things. And I hope that I am a model of that isn't happening for me. I'm always trying to learn more and do more. And
you have, but you have evolved. It's interesting because the latest dog that we got from Heather is a really, really great golden retriever. Oh my gosh,
she's the bomb.
She's the bomb. Her name is Georgia. I didn't pick the name. It was a vote. I didn't win the vote either.
I was gonna say you lost.
I did. But we love Georgia, and she's super cute. But how? And could you talk about evolving?
Right.
And so nonprofits have to evolve. I think it's really interesting in terms of Georgia's story, but what it represents and how you've changed the matrix with which you operate. So could you share that?
Sure. Yeah. So when we started we were born in '94.
Yeah.
But around the year 2000, we really got involved in what was happening in our community, and our community at the time was taking in 120,000 animals a year, and the euthanasia rate was very high.
Right.
And so, and we were euthanizing in this community healthy dogs and cats and babies and just all kinds of things that will leave you up at night, which is what it did for me. And I thought, I have to figure out a way to help. And so, but we've done a really good job in our community on high volume spay and neuter, and really trying to increase those resources for people, pet retention if they need to help with medical care for their pet and things like that. So we have a lot of different things.
It's been getting better.
It's been getting better. And so, now our intakes are about 50,000. And our biggest hurdle right now is the bully breed type of dogs that are, the juvenile,
classic pit bull,
right? Where
things,
it's, they're hard to adopt because, the folks that want them have HOAs and homeowners insurance and all kinds of things that are problematic for adopting a dog of that. And some of them have behavior issues that need to be overcome and they need training. And so that's kind of our hard nut to crack right now in this community and in a lot of communities across the country. But what I've also done, because we've done such a good job here in Phoenix, is I've been able to just lift my head up a little bit and start looking around. And I was always so hardcore driven on Maricopa County. And then I started to think of the world a little more globally and thought, gosh, I remember what Phoenix was like, and I see other cities that are still this way or who are still struggling with wonderfully adoptable pets in their shelters and not a high volume of adopters. So, we started working with the ASPCA's transport program, and they've been bringing us pets from LA County shelters and also from some of the shelters in Texas. And we also started working with a rescue in Puerto Penasco, which is most people know as Rocky Point, Mexico. There's an American woman who's been out there for 17 years. She is an absolute dynamo out in the middle of the desert.
Right. And that's where Georgia came from.
That's where Georgia came from.
And sorry, go ahead.
So I look at these photos, and I visited there, and I am absolutely humbled by the work that Barb and her team does because
in Mexico,
because you think it's hard here. I mean, it's such an uphill battle because they're so poverty stricken that there's just not even a thought of, sure, I can spend $50 to spay my dog. It's just, it's 3 days work for somebody to earn that kind of money. And then what things are they not paying for, like food for their families? And so, I really respect being in that kind of an environment for a long period of time and still being able to get up every day and feeling positive about the work you do. And so for us, we bring Barb's dogs to Arizona. We meet her right on the other side of the border at the gas station, and they go from her SUV.
Into your van?
She pulled up with a regular, like a Mountaineer or something type SUV, 26 dogs. In this SUV, just all over in the car. That most of them weren't even in crates. And here I pull up in our van that's insulated and air conditioned, and there's separate crates for every dog. And I just, and we are a lifeline for those dogs. And the photos that they have of where these dogs are coming from, houses that you wouldn't think people actually live in because they're just like a little four walls.
And the cost to take care of those dogs and to spay those dogs is different?
Well, I mean, when you look at U.S. dollars, it's like $25 to spay a dog. In Mexico, that would probably cost $200 here. So certainly it makes sense for us to maximize our dollars to have them sterilized in Mexico before they come across. But, and it's a give and take because Barb does some of the work and then they get up here. And of course, they're animals. They're not stuffed animals. They have conditions that you don't see at first, and then we recognize them. And, we've done eye removals and hip surgeries and all kinds of crazy things for these animals that we discover they need once they get here. And so it's really kind of a symbiotic relationship where they provide some and we provide the other, and we have the adopters that they don't. So, they have all these great dogs that are very adoptable and not a lot of outlet for them. And we have a beautiful system set up to adopt out pets in lots of different locations.
And I think that's and to me, and that's, first of all, thank you. It's well put. It's
thank you.
Well put. And that to me just sums it up really well. I can't encourage people enough to stop and think about all the great work that nonprofits do. and think about what they're doing to help your communities and to help people, to help animals. And we've gone through the deductibility discussion in that you understand what you need to do, whether you need to get a donor advised fund, you need to get tax advice to figure out how to make your charitable contributions deductible, because what you give is critical to nonprofits. And if you don't get a deduction for it, that's okay.
You can come hug dogs and it'll be all the deduction you need. Or cats. We have both, whichever you prefer. Or both.
There's both.
You don't have to pick.
You don't.
No.
But we're not getting into the turtle market. That's what.
No.
Okay, good.
Mammals. Mammals.
Mammals. Okay, got it.
Yeah, mammals.
That's good. That's a good,
right.
good way to
draw the line.
That's right.
Warm-blooded.
Perfect. So with that, Heather, thank you so much for joining us on the Manage the Funds podcast. It was lovely having you here.
It was my pleasure.
If you want to find Heather, you can go to Halo Animal Rescue. You can Google it.
HaloRescue.org.
Correct. And the website's new.
It is. It's pretty snazzy. Check it out.
Okay. Well, I will. Anyway, again, thanks again. We appreciate you tuning in. Thanks for listening to the Manage the Funds podcast. Material on this program is intended for general information only. It should not be taken as a specific investment, tax, or legal advice. None of the information contained in this broadcast is intended by the host to be a solicitation for sale of any security. Further information is available by contacting Henry & Horn Wealth Management. Securities offered through Independent Financial Group, member of FINRA SIPC. Advisory services are offered through Wealth Management LLC, DBA Henry & Horn Wealth Management, a registered investment advisor. Henry & Horn Wealth Management and IFG are separate and unrelated entities. Henry & Horn and Henry & Horn Wealth Management are also separate entities as well. Member of FINRA and SIPC.